Welcome back, and joining us on the show now is Mr. Atul Chaturvedi. He's chairman at Asia Palm Oil Alliance, and he joins us live now. Mr. Chaturvedi, hi. Thank you so much for joining us. This is wishing you a very, very happy, prosperous 2025. And going on to palm oil prices, then, I mean, it was quite a movement and volatility that we saw in 2024, especially the second half. If you look at the prices report card, while we've declined 11% in the past month, but the year 2024 actually gained up by 25%. One, how do you see this volatility? And two, with the kind of correction that we've seen in prices, do you see it becoming favorable oil yet again for India?
Manisha, a very, very happy 2025 to you and your colleagues in CNBC.
Thank you.
Now, coming to your question on palm, my take is there's a saying in the northern India, "Hum to doobenge sanam, tumko bhi le doobenge." In fact, as a matter of fact, what we are seeing is the cost of diverting close to about 40% amounts to something like anywhere between 15.5 to 16 million tons of palm oil. And this, at this point of time, they're losing something like about $350 to $400 per ton. In totality, this would amount to a sacrifice of about $5.5 to $6 billion. So that's a massive, massive money, which is being taxpayers' money, which is being pumped into diversion. Now, at the same time, what has also happened is they've given a lot of trouble to the rest of the consuming countries, India being one as well. So palm oil, which used to be the cheapest oil in the world, is now having the tag of being the costliest oil in the world. So it is now getting reflected in consumption pattern as well. If you look at the December numbers, in December, India is importing about close to roughly about 12.5 lakh tons. And palm, which used to be about closer to 9 lakh tons a month, is now down to about 4.5 to 5 lakh tons. So, and soya is gaining ground big time. And that's largely because soya now is available anywhere between $125 to $150 cheaper than palm, which is actually a reverse story. So my take is the Horeca segment in the country is now gradually shifting or reducing their consumption of palm. And palm used to be one very big sector of this Horeca. That we are seeing a diversion from palm to cotton oil. So all these
But Mr.
things
Chaturvedi, for the month of November and December, we might have seen this trend change. But would you say that India is a very price-sensitive country in that sense, and we really don't care what oil we are eating until the time it's cheaper?
Absolutely, absolutely. More so during the winter months, when palm oil has a tendency to harden, Indians generally prefer soft oils. But maybe February onwards or March onwards, when the weather starts improving, you might see some improved offtake in palm. But at this point of time, my take is that palm, with this pricing scenario, what India would need is just about what is the core demand. And the core demand for palm could be anywhere between 4.5 to 5 lakh tons. So my take is, going forward, palm has to become much more rational than what it is. And we are seeing that happening because they are losing market share big time. I was in Singapore till yesterday, and what we are hearing is that the consuming countries are definitely pushing more for soft oils, and palm is becoming a loser.
Okay, so it's not just India then.
India seems
Oh, absolutely. How would you look at the prices going forward then? I mean, we've seen 5,500 on the higher side. We're trading around 4,500 right now, still on the higher side as compared to previous year. So what's your sense? Where do the prices need to come before India starts going back into its demand?
No, palm has to reach a reasonable level, which if you look at soybean oil today, CNF India is about 1,075. Palm is at 1,200, and this is after the fall in the last couple of days. So palm has to fall another $150 before it starts getting serious buying interest from India. So I think the writing is on the wall. And mind you, it is going to be a very painful 40% blending as far as the Indonesian taxpayer and Indonesian economy is concerned. So I think there's some, maybe, who knows, there could be some little bit of a rethink on increasing the blending from 35 to 40%. And palm oil losing share, I don't think the Indonesians are going to be liking that.
Oh, sure. Well, absolutely. Mr. Chaturvedi, thank you so much for joining us and making sense of what we've done in palm in the previous year, how it's impacted the Indian oil economics, if I can say so, and where the prices need to come to see those demand numbers yet again. Thank you so much again for speaking to us and throwing light on what really it means for the Indian edible oils, palm sector in sense of consumption. Well, with that, that's all the time that we have on the show. Thank you so much for watching. After the break, Business Lunch will take all the action forward.